back to another video. Today's video we're going to look at the work necessary to become a really great trader. Yeah. So we've got pre-built and developing, and then we've got continuous building in terms of work. So pre-built and developing will be your risk plan. So that has to be pre-built. You know exactly for your day, your week, your month, how much you're willing to risk, what your position sizing is, and that actually falls back into your daily routine, and you'll have something along the lines of a risk plan for the day as well for positioning. Then you've got your playbook, which is your setups, how you find those setups, if it's around news, if it's not around news, what the catalysts are, all of those things. That's also important, has to be pre-built. Stat book for the product you're trading. For instance, if at a certain time of the day there is more likely for reversal to happen, you need to know this according to your stat book. And then a stat book for your trading. So your trading, maybe this one is kind of, if you're starting out, this one is maybe not necessary right now. But if you've been trading for a while, that's absolutely necessary. You need to know your average hold time, your MAE, MFE, all of those things. When you feel overconfident, when you feel underconfident, all of that has to be put into your stat book. And now we're going to the really juicy things. This is what I'm going to actually be posting more of in upcoming videos. So goes into the continuous building and daily routine. Weekly and monthly routine I'm not going to share on YouTube. Also my risk plan, playbook, my stat book, all of those things I'm not sharing on YouTube for a while. If you want access to that, just leave a comment below. I'll figure out a way in the near future to give out access to those things. Some of it you're gonna pick up while I'm busy doing prep and things, and you'll realize, hey, he's dropping this kind of stat here, dropping this kind of stat there, and just take note of it. So in terms of daily routine, you need first and foremost, you need a self check-in. So that self check-in can be, or not can be, the self check-in is the most important part of the day. If you're not feeling confident, if you're feeling overconfident, if you've just had a fight with someone, an argument, someone told you something, you need to understand what's going on so that that doesn't reflect into your execution. So execution is all the way down here. But if you don't do your self-checking, your execution will be flawed and you'll end up losing money for no reason. Cool. Environment checking. Is there anything, or just check your environment, is there anything around me that's maybe drawing my attention, disturbing? Is there maybe an open window where like breeze is coming in that's maybe too cold on me, or is my blinds open that I can maybe not see, but or have my windows open that I could hear cars outside that's distracting me? Are there any distractions around you? Is what the environment thing is basically saying. Okay, do I have any distractions around me? Can I fully focus on what I need to do? Okay, and then we get to equipment, which is also really important. The two that's really important is the self-checking and the equipment. The environment, sometimes you can't do anything about it, and you're just gonna have to maybe get some headphones or close a window, open a window, do what's necessary. The equipment part is really important. If your equipment is not working well for that day, do not take trades. It will again mess up your execution. You won't get good falls. Good falls means lower risk to reward. Lower risk to reward means this year your stat book would look worse. That's all it is. Your equipment, and then we move on to the second part of it. Once you've done all of this, you're happy with, okay, I'm not overconfident. My environment's good. I'm not underconfident as well. My environment's good. I've got fresh air coming in. I've got enough natural light. All of those things. I've got enough water. I'm hydrated. My equipment is working well. My Wi-Fi is stable. I'm not having any problems with my mouse. The batteries in my mouse are charged, or maybe you have a wired mouse and the wire is not in your way. All those things are good. Then you move on to the second stage. So this is like stage one. Stage two is my risk plan. How much am I willing to put on per position today? If I'm not feeling confident, I want to lower that. So maybe during that day, your risk plan comes in here, and that kind of links with your self check-in. So if in your self check-in you're saying I'm either A, overconfident, or B, underconfident, you need to lower your risk immediately. This is why it's part two, after the check-in, after your check-in and all these things. Also, under equipment, I didn't mention this, but software is really important. Making sure your software isn't lagging. There's no like slight delays in your data feed from what your broker is having and your actual your like trading platform and your broker. Then your risk plan, again, goes back into your self check-in. Am I overconfident, underconfident? You need to lower your risk. If it's okay, I'm feeling good, feeling comfortable, I'm ready for today, normal risk as per your pre-built risk plan. Cool. And then let's go over to visualization. Visualization now links into that's your playbook. So in terms of maybe it's a certain day of the week and you have a certain playbook around that, you're going to visualize seeing what works, how you can push that edge further by maybe adding more, trying to get it earlier, things like that. And then also you're going to do visualization around what didn't work or what doesn't work, or what you found not to work in the past, and you're going to try and identify those cues inside of the visualization to then realize, hey, this is not working, I need to get out, this is not working. Also, in terms of visualization, it will also help with your risk plan. Not actually with your risk plan as a plan, but with your risk. So you'll realize, okay, I've got this much risk, this is my plan, visualization. If I'm up, let's talk in terms of R now. If I'm up 2R and my risk for the day I know is 5R, I have 5R risk for the day, and you're up 2R, in your visualization, you need to kind of bring that into your mind and feel the sort of quote unquote discomfort of being up and the discomfort of being down in terms of P&L. How those feelings differ and how you could actually manage those emotions and feelings. And then affirmations, really good to have affirmations next to you saying, first and foremost, a really good affirmation is having your stats next to you. I don't think a lot of people use this as affirmation, but I do. So stats saying, I'm not worried about the next trade because I know my win rate is 40%. So in terms of the next 10 trades, I could lose 8 and I could still win 2 and still make back that in terms of risk reward. So I know in terms of affirmation, I've got my stats as one of them. That's just a quick example of affirmation. But affirmation is like could also be reading certain literatures into, like visualizing your past wins, your past losses, and actually get the feeling of winning, and then trying to use that feeling of losing as sort of a flip affirmation so that you don't want to be in those positions, and then actually speaking that out, saying, if I'm up 8R, I'm going to close the position because my risk, obviously depending on the position, because my risk model says so, and then also going into speaking positively about yourself, saying, I'm good enough to trade, I'm good enough to do this, there's no one better than me, I'm here to make money, take money out the market. I'm not worried about who's in my way. I'll do my job and get it done. That's like sort of affirmations. And in preparation, these are all now charting. So this is charting preparation. So you'll be doing like marking up key levels, highs, lows, whatever you're into. And then it goes on to execution. This forms a loop, which you can see with the arrows. Your execution, you note down how you executed, according to your playbook, whatever. The journal, and that moves over to journaling. After you executed, make sure to put that in a journal. Sometimes while you're busy executing, you forget, maybe use simple arrows or like a risk reward tool on TradingView or whatever. A lot of softwares have this execution like built in and you can see it after the fact, but having a separate chart with showing your executions denoted by you is something that I think was game changing for me. And then journaling that in real time, right after you take the execution, saying, this is why I got into that trade, this is why I got into this position, this is why I scaled out, this is why I added on. So journaling is really important. And then also inside of journaling, any important thoughts or crucial thoughts or ideas you have around maybe an add in that position or a scale out, and that links to your weekly routine. I'm not going to push too much into weekly routines or monthly routines just because I feel like the video is going to get too long. But journaling, you do that. Any key moment you think is key, any ideas you bring, any ideas you have, goes into a journal. That journal also has to be time stamped. So if, let's say it's 210, scratch that. At 210, you get an idea of going long. Then you have to give reason. In your journal, you give reason. And let's say 217, you get a add opportunity. So you're already in this position. Check. You're in this position. This is kind of a position you want to get into. There's an adding opportunity. Initially, you do not take this because it's not part of your playbook. That journal will help you stick to your playbook. Stays in your playbook. I don't know why it's doing that weird thing. But you see, 217 is an add. That then goes into your weekly routine, going to see, hey, when I take similar positions to the long that I was in, how many times do I get this kind of add, the adding opportunity, and how many times does it work, how many times doesn't it work, and where would it be in terms of stop? Would I have a loose stop, tight stop, trailing stop, things like that. So that's like a weekly routine kind of thing looking at. Okay, and then obviously daily reviews. After journal, push it into daily reviews. That goes into like any positions you missed. It's not drawing. Okay. That goes into any positions you missed, opportunities you missed, why you missed that. Maybe you went to the bathroom and then you missed the opportunity and you didn't take it again, which is really good because you're not chasing it in. So your review goes into that. Um, Missed opportunities, over risk, getting in late. So anything to do with execution and preparation will then be done under review. Your journal thing for in terms of daily review, in terms of your daily journal would only be pushed into a weekly review. So you're not doing a review of that idea every single day and changing your playbook daily. You have an update saying, okay, this is something crucial that I've seen now play out 4 or 5 days in a row. I'll push it into my weekly routine, go and look at it, go and build now a stat book around that thing, and then try and add it to your playbook. Okay, cool. So with that being said, uh, this is how you do that. So it's preparation, execution, journal, review. That's in terms of trading. In terms of like self-regulating, it's a self-check-in, environment check-in, equipment check-in. That's three. And then in terms of pre-market, before you look at any charts, you do a risk plan, visualization, affirmation. Cool. Hope you guys enjoyed that. Cheers. That's the work that's required. Seems like a lot, but when you kind of have it in a flow state, or like you just wake up, you're like, okay, cool, I need to do this review, this market review, this market review, this market review. Takes maybe 20 minutes, and then you start saying, doing my self check-in, half an hour before session. Self check-in 5-10 minutes max, no more. Otherwise, you start looking for reasons that, or looking for things that are wrong that aren't immediately wrong. And then you go into your risk plan, your visualization, affirmations. Then you go into chart prep, execution journal, like chart prep, and then once reach like level that you prep for, execute, journal the trades, journal any ideas, you do your review, and boom, that's the cycle. And this is how you become better. Cheers.